We told the Silicon Valley Bank shutting down, that I know that that's going to put hella demand on the dollar, but I think we're seeing a lot of inducement right now. Like I'm looking at GJ, and I'm actually glad. I gotta thank my wife because she kept me out of re-entering GJ last night. Just on the strength of like, yo, like you said, no charts on Sunday, nothing until Monday. And I got up today and I'm like, damn, that thing tanked. Now I feel I am looking at the fundamentals and I'm like, it's definitely about to buy. You're like just looking at the fundamentals period, but I'm like, where's the buy coming from? And I think I found it. So if you want, I can share my screen with you to show you what I'm looking at. It's a Wyckoff schematic that's playing out, and I can show you exactly what I'm looking at, how I got in on it. But then other than that, we can just dive into whatever you want to talk about today. Images real quick. You see where I caught the buy, right? Like so these gray lines here, these are the prices that I enter. So I got two positions on. So I caught right here, and I'm in on this as well. So I want to show you from a Wyckoff standpoint why I think it's going to go up, and I'll even break down fundamentally why I think it's going to go up. The alert that I'm about to set here in a second is when and if we get a break above this trend line right here.
Okay.
So let me pull up my images real quick. Here we go. Okay. So can I annotate on this? Well, let me annotate. Yeah. So I think what I saw, or what we saw originally last week, was that seller's climax here, and they gave us that preliminary support right there, and then an automatic rally up, and we've got liquidity built up here and here, right? So I see that here, right? So we got that preliminary support right there. This is where the automatic rally came to. Right, you see we got the liquidity built up here, equal highs here, right, and then price pressed up a little bit more, all of that. But after the automatic rally, whenever you get the automatic rally, price trends down and gives you what's called the preliminary support, or it gives you the secondary test, and then price hits that area again. And that's typically where you see this right here, secondary test, right? Okay. So that's the creation of those equal lows, which we know is liquidity, right? Right. But we look at that there, we saw these lows are relatively equal. We probably saw that as an area of support. Or we saw that as support, right? And then after the secondary test, right, you'll see price will trend up, probably really reinforce the liquidity here from that automatic rally, building up even more liquidity. And then we get the inducement, right? Where it's a really aggressive drop, giving us the spring. Right? All of that, that's where the secondary test liquidity and the preliminary support liquidity are taken out. And once we see that liquidity has been taken out, we want to see price begin to trend up, right? So now I see this and I'm like, bam, here's that hard inducement, right? And
right, wow, yeah, just like it.
You see what I'm saying? And this inducement came with a fundamental driver that was supposed to make the Japanese yen significantly weak. Right. That's why I was like, we just got to find the area where it's going to come from, right? So I'll scale into some of the other reasons why I took the trades and everything like that. But you see, currently we're blue, and I'm looking for this thing to go off. So fundamentally, I want to go into what I saw. Let's go to Forex Factory. Okay, so here. Now you got the breakdown from the Saturday morning markup.
I was going to say, if you're going back over that from last week, I understand where the Japanese yen had its flat interest rate, so no change there. Then the bank statement came out basically indicating that, I can't read it verbatim, but I knew it was making the yen go bearish. Yeah. And that's why this morning when it was like, oh my God, the yen is super strong. I'm like, what's going on?
It's inducement. It's inducement. It's a classic inducement. This right here, I didn't look at this, right? So this is Sunday, and I literally did no chart work, didn't look at the news, anything. But this is what I saw this morning, and I was like, oh, this thing's about to go off. The BSI manufacturing index, right? Now, like, because Japan is primarily an export country, their manufacturing index is more important than their services index, right? So since their manufacturing index came out significantly lower than expected, we should have seen that as bearish price action, or at least long-term bearish price action for the yen. Because this is one of those things like actual greater than forecast is good or bullish for the currency. So if
we come out way less,
right. Like we wanted to see the currency go bullish, this number would have needed to be smaller than 4.2 and smaller than 2.6. There's big variance there, right? So it's getting worse because numbers above zero indicate optimism. So numbers above zero would make it bullish. It's getting further and further away from zero. You know what I'm saying?
Yeah.
So that makes it even more bearish. So when we saw this fundamental driver for Sunday, this is Sunday at 8 o'clock. So Sunday at 8 o'clock p.m. Eastern Standard Time is 10 a.m. in Japan on Monday morning, right?
Right.
So this news came out, and they basically they dropped the market. You know, you figure where's the 8 o'clock news at? Let me see. 8 o'clock is 20. Right here. Right. This is when the news came out. And then of course I see the creation of the liquidity with these highs being equal right here. Right. Inducement in London, because you figure London session is what creates the false move, right?
Right.
London, the London kill zone, price pushing down. We're well beneath the Sunday open. And now it's like, all right, it's time for us to get in, because ultimately this is the white call spring we're looking for. And this right here, this gray box that I've got marked off, this is, I found this imbalance over here. And I made sure I marked up these liquidity points for a reason. And I'm glad I did, because like when I saw price push down, I was like, okay, all this did was sweep buy side liquidity. If I extend that out to the right, sell side liquidity, right? It just swept sell side liquidity right there. You see it pressed down, took it out. I want to say this was it a 4-hour imbalance? Here it is right here, 4-hour imbalance. Between this point right here, let me just get rid of that. This point here and this point here. Just a big old fair value gap.
Yeah.
You know what I mean? Price pushed down into it. It's a buyer's fair value gap. So we should expect repeat price behavior from it. It took out the liquidity from this low here. Go ahead and make those coordinates. Copy. So that's all that was just a sweep of sell side liquidity coming into the buyer's imbalance for the mitigation. And now we're seeing it turn around and go up. Like we had all the fundamentals to take it up anyway, but it just swept more liquidity than what we would have expected. And that's why I was like, it's time to get in. My reason for getting in was this. Seeing the same thing fractally. Price pushed down, rallied off, came back. I think price began to diverge right here. Yep. Price began diverging. So I originally took my first entry here, and I had my stop loss underneath 160. At my stop loss underneath 160, and then I saw, after the divergence was set, the price pushed down, rallied up, came back, and then all it did was fill this imbalance right here. This 5-minute imbalance right here. So when I saw it push into that.
Oh yeah, perfect, yeah.
Right? When I saw it push into that, that's when I hit market execution, but basically the spread allowed me to get in right here versus getting in right here where I wanted to. And that's cool.
Love the spread.
Yeah, gotta love spread, but I'm like, it's 2-3 pips, whatever. But the entry's really sniper. I see the inverted head and shoulders forming. So now it's just like, all right, I'm expecting to see price pull back and retest this general area, and then to give us structure. And then once we get our structure pushing up and closing pretty aggressively above that trend line and the Sunday open, that's when I'll scale my stop loss into right here. 7 pips. And probably bring this one to break even and let that be that, and I'm looking to hold this for a little while. But that's because I'm just like, they've got too many fundamental drivers to make the Japanese yen weak for me to believe this bullshit.
Yeah.
So technicals and fundamentals are marrying up. It's just a matter of just really refining the entry. So I think we're good. I think we're sharp on this. I want to see it play out, and I'll have some alerts going off. Like as we get, when we get a close above the secondary test, that'll be a good sign. A close above the trend line will be a good sign, and then a daily close above the Sunday open, that'll be the final sign for me.
and off to the races. Well,
Racing.
off to the races now, but really for sure off.
Yeah. But yeah, man.
Cool. Thank you. That was awesome.
Of course, all glory to God. But talk to me, brother. What brings us together today, man? What brings